Hi, Larry Gaines, PowerCycleTrading.com. Well, today the bond market broke a key support level. So it kind of right here, this is the 30-year Treasury, and you can see that it's been trending down, and just every time it's moved into this is a weekly long-term. Every time it's moved up into the 8 or 21 period moving average, it's been a moving average. It's been a failure and a price movement back down. So you can see right here this last prior low back on the 30-year bonds back on March the 16th, 2020. Came in right here at 167.05, hit there, bounced and retraced to the moving average, failed, and then started breaking back down in early February. So what I did based on that back in early February, I put on a trade for TLT that would just take a benefit from if this market did start to roll over, which it did. So set it up right here on the 3rd, and you see this channel, this trend channel to the downside, and broke through that. So what I did was a calendar diagonal on TLT. So let's take a look first at the daily, and then I'll show you how this trade setup works. So set this trade up back on the 3rd and just kind of put it on the shelf and just actually haven't looked at it. But it was a short trade based on our momentum indicators and based on the weekly long-term chart that I just showed you. And so this was going short TLT. The way that I set the trade up was that this is kind of a slow-moving security or ETF. So it kind of moves, not real volatile, kind of slowly moves. So a really good structure for this is to do what we call a calendar diagonal. So I did this using a put calendar diagonal spread for a move lower, and it also gives you plenty of time to let the trade work its way out. So here's what it looks like. So I wanted to have plenty of time for the trade to work. Like I said, it just a lot of times will take a slow path or slow move. So went out and bought the 16 April option series, the put here. So this was back 2 weeks back, so it still has plenty of time. So this is a put calendar diagonal, and this is what it looks like. So on the 3rd of February, bought the 149 put. It was trading right here at 149, and then sold at a target to about right here 146. So sold the 145 put to give it enough spread. So $4 wide spread, and did it at a debit cost of $330 or $330. So that's within the spread cost. Now when this broke hard yesterday or Friday, and then today broke hard to the downside, this thing really had a big pop, and you can see currently is up over about $190 per spread. So really working well. Now it's right into that short put strike, so I'm going to have to do something there, probably close this trade out tomorrow or adjust it. But this is a really great strategy for any kind of term, longer term, medium term trade setup where you think it could take some time for that particular stock or security to finally work its way into the direction that you're looking for it to go. So if you'd like to learn more about these types of strategies, calendar diagonals, cover calls, things like that, I'll be doing a free option workshop this Saturday. So make sure to sign up and join us. Good luck trading.